Ever catch yourself hitting refresh on your portfolio every 5 minutes? Like, come on, where's that magic number?
Yeah.
We all crave those instant results, don't we? Especially with investing. But what if we've been approaching it all wrong?
Hmm.
This deep dive got me thinking. What if instead of chasing those quick wins, we thought a little more like, well, farmers?
It's funny you say that because it's a pretty insightful comparison. Think about it. A farmer can't just like yell at their crops to grow
Yeah,
faster, right?
right.
They have to respect those natural growth cycles. And investing, well, it's the same thing. You need time, you need a plan, you need patience. And that's where this whole think like a farmer idea comes in.
Okay, you've definitely got my attention. I'll admit, I did try blasting disco music at my basil plant last week, hoping for a growth spurt. Spoiler alert.
Hmm.
It didn't work. So, is that what we're talking about here? Chilling out about those daily market ups and downs.
Exactly. Our brains are hardwired for that instant gratification, that dopamine hit. But the market, well, doesn't really care about our need for speed, does it?
I guess not.
Nope. It's all about emotional discipline. It's not about freaking out over every single headline or, making impulsive decisions based on emotion. It's about crafting a solid strategy and sticking to it, even when things get a little bumpy.
Okay, so no more panic selling when a stock dips a little. See,
Yeah.
that's my weakness. I pull out of trades like I'm yanking up those sad little supermarket herbs thinking, oh, there's got to be something better right around the corner.
I've been there. It's such a common mistake,
Yeah.
especially for newer investors. But giving your investments the time to actually grow, that's crucial.
Yeah, yeah.
Think of it like this. You wouldn't plant a tree and then, I don't know, dig it up every single week just to check on the roots, right?
Right.
You've got to trust the process, let it mature, let it do its thing.
That's a pretty powerful visual. But how long are we talking about here? Asking for a friend who maybe sold a stock after 48 hours once.
Right, right. Well, it varies, of course, depends on the specific investment. But a good starting point is to think 3 to 5 years, at least, with a stock you've researched thoroughly.
Gotcha. Let those roots run deep. Now, our source also talked about picking the right crops, and I'm guessing this means not treating all investments the same way?
Exactly. Just like a farmer chooses certain crops based on the soil, the climate, all of that, investors need to consider different asset classes. Things like, are growth stocks right for you? Or are you more of a value stock kind of person? It all depends on your financial goals, your risk tolerance, and of course, the market conditions.
Growth stocks, value stocks sounds like a whole other language. Pretend I just wandered in from, well, the farmer's market. What are those?
Okay, so picture growth stocks as those exciting startups, tons of potential, growing super fast, think tech companies. Value stocks, they're more like those established farms that have been passed down for generations.
Yeah.
They might seem a bit undervalued at times, but they offer that stability, that potential for steady long-term growth.
So it's about understanding what kind of seeds you're planting and making sure the current season, the market, is the right time for them to thrive.
You got it.
Okay, I think I'm getting the hang of this whole farmer investor thing, but picking the right crops is just the beginning, right? Our source also mentions something about nurturing your investments. What's that all about? Am I supposed to be out here watering my stock certificates?
Well, a little H2O never hurt anyone, right? But in all seriousness, nurturing your portfolio is about staying engaged. Remember, even the most experienced farmers, they don't just scatter seeds and walk away, right?
Right.
They're out there constantly checking the soil, adjusting their irrigation based on the weather, dealing with pests. Investing, it's
Yeah.
kind of the same deal.
So we're talking about more than just those, panicked 3.0 a.m. checks on our phones then. What does a healthy level of monitoring actually look like?
Okay, think of it like this. You schedule those regular checkups with your docs, right? Annual physical, all that.
I try to.
Same idea with your portfolio. Doesn't have to be obsessive, but every few months, take a step back, look at how your investments are doing, see if they're still lining up with your overall goals.
Okay, so being proactive, informed, not just letting things run wild out there.
Exactly. And just like a farmer would, pull out any weeds that are choking their crops, you've got to be ready to make some adjustments to your portfolio. Maybe sell off something that's not performing or doesn't fit your goals anymore, that kind of thing.
See, selling, that's where I tend to freeze up. How do you know when it's time to cut your losses versus just, like, ride out a dip in the market?
The million-dollar question.
No.
Honestly, there's no one-size-fits-all answer, but one helpful way to think about it is understanding your own risk tolerance.
Risk tolerance.
Yeah.
That sounds like something you need a finance degree to understand.
It's not as complicated as it sounds, I promise.
Yeah.
It basically boils down to how comfortable you are with the idea of your investments losing value. Some people, they're fine with high risk, high reward stuff.
Hmm.
Others, they'd rather play it safe,
That
right?
makes sense.
So understanding your own risk tolerance, that can help you make smarter choices about when to buy, sell, or hold.
So it's like during those portfolio checkups we talked about, you're not just looking at the numbers, but also asking yourself, am I okay with this level of risk?
Exactly. And don't be afraid to reevaluate that risk tolerance over time either. Life changes. Your financial goals might change. Your comfort level with the market's ups and downs, all of that can change. Your portfolio should reflect that.
It all comes back to that adapting and evolving thing, right? Like a farmer adjusting to a new season.
100%. The market is constantly changing, right? The economy, interest rates, even what's happening in the world. It all plays a role.
So basically, it's like trying to predict the weather sometimes.
Pretty much, which is why it's so important to stay somewhat informed, just like a farmer would keep an eye on the long-range forecast.
Yeah.
Pay attention to market trends, economic indicators, that kind of thing.
So we're not all becoming economists overnight,
No, no.
but a little knowledge can go a long way.
Right.
Yeah, it definitely sounds like more than just like stock tips. This think like a farmer thing, it's a whole mindset shift, isn't it?
You nailed it. And that's what I love about this analogy. It's bigger than just investing, you know. It's about bringing that patience, that adaptability, that long-term vision to, well, every part of life.
Totally. I'm imagining like a farmer who's been through the ringer, right? Good years, bad years, but they never lose sight of the bigger picture, that resilience, that trust in the process.
Exactly. And think about it, just like that farmer who's finally celebrating a huge harvest after months of hard work, we can experience that same satisfaction when we see our investments grow over time. But of course, you got to be prepared for the storms too. Those market downturns, they're going to test you, no doubt about it.
Oh, those downturns definitely make you second guess everything. But are you saying like we should try to see those as just another season?
It's all about perspective. Right. Think about it. A seasoned farmer, they're not going to abandon their fields the second little bad weather rolls in, right?
Right.
They adapt, they find ways to protect their crops, maybe even use that downtime to do some maintenance,
Yeah.
get ready for the next season.
So instead of panicking, we should use those dips in the market to reevaluate, maybe even explore some new opportunities, like a farmer trying a new crop rotation or something.
Exactly. Those downturns, they can actually create some really interesting buying opportunities. Kind of like a farmer stocking up on supplies during the off-season. It's about recognizing that, hey, market fluctuations, they're normal. It's not a reason to just jump ship entirely.
This has been seriously eye-opening. As we wrap up here, what's one thing our listeners can do, like today, to start putting this think like a farmer approach into action?
I'd say take a good hard look at your current crops, so to speak, those investments you're holding on to. Channel your inner farmer. Go out there and inspect your fields. Are those investments still lining up with your goals? Do they still match your risk tolerance? Really think about it.
Such great advice. So the takeaway, let's all try to bring a little more of that farmer wisdom into our finances, maybe even our lives as a whole, right? A little more patience, a little more resilience, a little more long-term thinking.
Couldn't agree more. Because ultimately, the best things in life, a thriving garden, a successful business, a comfortable retirement, they all take time, they take effort, and they definitely take patience.
So true. Well, on that note, we'll let everyone get back to tending to their metaphorical fields. Thanks for joining us for this deep dive, everyone. And remember, slow and steady wins the race. Until next time, happy harvesting.